afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the cues are poised towards the more positive because the Nifty is heading towards that 18,800 mark. Yes, off the highest point of the trading session, but not too much to worry about because at least those all-time highs seem to be in sight. Having said that, it's the Bank Nifty which is clearly underperforming today. There's a downtick of almost 100 points as far as Bank Nifty goes, and what's doing well is metals. So metals are surging given the fact we have seen a bit of a stimulus come by for the Chinese economy. That has, perked up the demand for the metals, and overall we are seeing a bit of a surge there, and that's the best performing sector as well. The worst performing sector, however, continues to be IT. Of course, there was the incremental negative today because JP Morgan has opened the negative catalyst watch on a lot of counters, and there was a downgrade coming in on Persistent systems as well. So the IT pack is on the back foot, but Reliance is finally participating. It's sitting at a 5-month high, and today as well, that's the highest contributor on the upside. What's putting the pressure on the markets and the reason why the Bank Nifty is lower, as I talked about, is HDFC twins. They are in focus because reports are suggesting that there might be a bit of a cap when it comes to the investments of mutual funds. So we're watching out for that developing story. But for now, those counters are on the back foot, Aisha.
Oh yeah, that they are. Talk about specific names, and it's clearly Tata Chemicals. That's the one which has been holding high. They've cut the soda ash prices after Nirma. They followed a higher cut with almost 2,300 bucks per million tons. I stand corrected. The stock is actually falling today. In fact, it's the biggest price cut that they have seen since November 2022. Also, that the stock goes ex-dividend today. So quite a few adjustments over there. In the meantime, Vodafone Idea has been very buoyant all through last week. Today as well, it's holding up 3.25% as we speak. They're looking at an equity infusion of 14,000 crore rupees in the near term. That is what the newspaper reports seem to be suggesting, and that's keeping this stock buoyant. Anisha was highlighting and flagging off the weakness in IT. Persistent clearly is stuck like an eyesore. JP Morgan has downgraded the stock to an underweight, the target price at 4,100 rupees. That stock, of course, under pressure. Bernstein has come out, although with a view on Gland Pharma. They've put an outperform rating and a target price of 1702. They're saying that then upside potential is about almost 60% from the current market price in lieu of that target price of 1702 that they've set, and they see partner market share actually recovering. That's keeping the stock afloat about 2% higher as we speak right now. For the index as well, a mild bit of recovery. The futures have already made it back to that 18,800 mark. But Kunal as well as Manoj on the show today to talk about charts. Kunal, we've been here before. Can we actually hold higher, or are we going to again slip into consolidation?
No, I think we should manage to go into a breakout mode. Now, I think the market seems to have gotten an inkling that Bank Nifty would likely underperform because of the way most of the large cap banking names are underperforming: ICICI Bank, HDFC Bank, Kotak Bank, etc. So I think in that regards, there are other sectors which have made very good comeback, whether it's the real estate pack, whether it's the select auto names which have been doing pretty well. Pharma stocks have managed to see some good recovery. So I think the next leg on the upside, even Reliance today has managed to participate quite well. So I think the market now could probably move up higher with the Bank Nifty underperforming, or at least remaining in a range, if not a major underperformance for the Bank Nifty. I think 44,000 odd could be a pivot range or a support for Bank Nifty. But my sense is that possibly in the next few trading sessions, if the strength in the large cap names like what we've seen today, the likes of Reliance, etc., if that sustains for even a couple of days, then I think we could be closing in towards the new highs pretty quickly.
Okay, closing in on all-time highs pretty quickly. That's the word coming in for Nifty, though Nifty Bank, as Kunal also attributed to, is the one which is in the red. Let's take the view from Manoj Muralidharan as well. He's also joining us on the show. Manoj, what's your take as far as the market is concerned? At least we're seeing some sort of buoyancy from the heavyweights as well now.
Yeah, good afternoon. I guess there are a couple of things that we need to consider. First is if you go back maybe 100 odd days, FIs have been on the shorting spree. Their net average short in the index futures used to be around positive of 70%, and now, at least in the last two expiries, even in the June contract, we are seeing their net longs and shorts are almost equal at 50%. Now, that is one thing. The second thing is usually Nifty has a participation of at least 1.25 crores in terms of open interest, but this time in the June series, it's shying away. We are hardly at around 92 or that clearly says that the instrument or the participation is not really from the Nifty futures much in a trending market. It could more be from an option trade. So what we feel is with the volatility index closer to 11.5%, the Nifty has a potential of 150, 200 odd points. So, but then we feel it would be grinding, and maybe we get alpha in terms of gap up opening, and we are not really seeing any intraday clear buying that happens. Even last couple of days, like you were mentioning, there was money which came out of automobiles and IT as a sector, which was doing good in your April and May series, and we have seen for the first time metals as a sector adding some money. So we believe that with the bank Nifty not really working in tandem to what the Nifty is, maybe 150 odd points, 18,900 to 950 can be a target for the Nifty. But then I believe that Nifty is more going to correct towards 18,500 to 600. That might happen eventually in the June series. That is when we might see a trending market go on. So it's a range bound session with a positive bias. Use an option strategy. We can go for a long straddle, simply buying an 18,750 strike call option to get it for 50 rupees. You hedge it by buying a put option also of the same strike with 80 rupees. The stop loss should be 40 rupees, and an expected target of close to 140 should be on that strategy.
Right. Okay, that's the call coming in on Nifty. And of course, Manoj as well as Kunal both highlighted metals. So metals it is. Let's focus on that space. They've been clear sectoral outperformers of the day at least. But what's been aiding the rally? Ashesha is here to put all of it into perspective. Ashesha?
Well, yes, metal stocks are buzzing in trade today. In fact, Nifty Metal Index is the biggest sectoral gainer in today's trading session. Remember, China is the world's largest consumer of commodities, and any positive news that comes in from China is positive news for the entire sector. Yesterday, the Chinese government cut 7-day reverse repo rate to 1.9% from the earlier 2%, and this is the first cut that we have seen since August 2002. This is a positive news for the entire Chinese economy, which could boost the real estate sector of China, which in turn is a positive for the Indian metal stocks as well. In fact, we have Chinese data which has been weak of late, which has been impacting Indian steel sector as well. Imports have been rising from China, which is impacting the domestic steel sector, because of which domestic steel prices have corrected nearly 14 to 15% year to date. In fact, if we look at the index on a year to date basis, Nifty Metal Index is down nearly 10% versus Nifty 50, which has gained nearly 3%, which means significant underperformance is what we have seen as far as the Nifty Metal Index is concerned. Global recessionary fears, rising dollar index, rising interest rates is the reason why year to date we have Nifty Metal Index is underperformed. Today, of course, on the back of strong commentary, on the back of positive news flow that has come in from China, which could boost the Chinese economy and in turn the Chinese real estate sector, the entire metal pack is in focus today.
Okay, Sesha, thank you so much for joining us with that. Let's take it across to Nitin Raheja from Julius Baer as well. Nitin, what's your take on the metal space? Would you be a buyer at all?
Look, I think it's the metal space is really more of a short-term tactical trading play. If you really look at what's happening is, Chinese over a little longer-term period, it's very, very clear that the Chinese economy is slowing, and all measures are being put in place to sort of try and increase the growth rate. They have disappointed in terms of the numbers that have come, and the expectation is that this slow growth is not going away in a hurry. So I think metals are going to be range bound. You're going to get news flow driven trading bounces or rotational trades taking place as markets remain buoyant from time to time as that. But so they are more of, if you ask me, more trading plays rather than long-term fundamental plays.
But in general, is there a reason to avoid anything which is global denominated, be it metals or IT, be it exporters? Because China has not come back, US is slowing down, Europe is on the brink of recession. So just avoid anything which has got a global facing business.
Well, you're right, Nikunj, in that sense, and we've really, if you look at it long term with a lot of Indian corporations which have gone global, you actually see valuation re-rating take place in most of those corporations, because you align to slower global growth rates, and now especially with so much of haziness over that. But against that, you also have a phenomena where if you look at the sectors, some of the stocks have corrected to levels where the valuations of those stocks have become attractive, and in a market which is remaining buoyant, what is really happening is you're seeing this rotational trade, which to me is more of a tactical short-term trade that takes place from time to time, as we have seen in this for example, we saw IT come back. In fact, IT has been a very interesting pack where, you actually seen some of the mid-cap IT stocks in the results actually do very well compared to their larger peers and so on and so forth. And have seen, quite a bit of a run-up happen. So I don't think this can be sort of played broader, but your point is well taken that, I think the domestic plays today from a growth, from a visibility perspective are far better areas to focus on.
Right. Nitin, we were just looking at the year-to-date best performers within the mid-cap pack, and there was interestingly PFC as well as CG Power amidst that. We all know as to how the demand for power has seen a scale up, but wanted to understand how should one best approach the sector investment-wise?
So, I think it's been sort of well established that after years of virtually no investment, we are reaching a very, very critical stage where you are actually seeing, power shortages or most utilities operate at, very high PLFs. And that's going to sort of drive investments into the sector once more. Hitherto, most of the investment was happening in smaller captive or renewable areas. But now you're again seeing an initial impetus towards that, especially, grid investments have already been happening on the transmission side. But you're starting to see initial signs of, actual captive or sort of merchant power plants being set up in terms of announcement. And that's probably what has driven the prices. I think you are going to see a continuation of this trend, at least, in the near future.
Banks are just not participating. And Kunal, that now becomes a great, area of concern. That banks are not participating, HDFC Bank is not chipping in, FIs are buying, and yet banks are underperforming. How long can an IDFC Bank or IndusInd Bank take the markets higher?
So yeah, Nikuj, I think, but I would still consider that it's a phase of the market where the banking stocks are underperforming. So I'm not sure that by when would the selling be over, but I think it's a churn which is happening from banking stocks, to other sectors. For example, today you have the metal stocks which have been doing exceptionally well. In fact, it's the second consecutive day for many of the metal names which have managed to spring up quite well, large cap names, Tata Steel, JSW Steel, etc. So my sense is that it's maybe a natural churn or maybe some sort of correction which has come back into the, the selling which has come back into the HDFC twins. That could probably be an overhang for the banking sector, but it's a passing phase with every kind of a bull trend or an uptrend that some sectors, some stocks consolidate. Just for example, I think over the last 4 or 5 days, if I'm not wrong, even the Nifty Auto Index has taken a pause, where the large cap names like M&M, Maruti, Bajaj Auto, etc., even these stocks have gone into a bit of correction. So, as I said, I think it could just be a phase for the index. For the Bank Nifty, in terms of resistance levels, 44,200 is a spot-wise resistance. So, I think whenever we would probably break out of that 44,200 mark on the spot levels is where I would expect the momentum to come back.
44,200, that's the line in the sand for the banking space. But time now for a quick break. But as we do that, let's take a look at a couple of counters. Delivery as well as Zomato, they're going divergent ways because delivery is something which is spiking up as we speak, a 2% gain. And if you look at Zomato, that's sitting with a cut of around 4 to 5%. So a bit of a profit booking on Zomato today. But slipping into a very short break. Don't go anywhere.
Implications of the HDFC Bank buzz and a source-based story that SEBI may not allow mutual funds to have a combined exposure of more than 10% of the combined entity. To give a backdrop here, SEBI regulations are very clear that no single mutual fund scheme can have more than 10% exposure in a single stock, even if the benchmark index or the benchmark weightage could be there. And I think this, in a sense, was a very big talking point when in 2020 Reliance was only going higher. And every mutual fund wanted to increase the exposure to Reliance, but they did not have the permission or the regulatory approval to do that. Right now, there is a special situation. HDFC Bank and HDFC Limited will merge, and we understand that the 60 mutual fund schemes which could be affected directly, indirectly, now that there is an indication that SEBI may not allow any fund to have more than 10% exposure to a single stock. Doesn't matter what the underlying weightage is. But again, this source-based story, we've not got a confirmation independently. We simply are quoting what one of the media wire agency was reporting. But we can take the story forward, and if this has to happen, could this have impact on the stock price of HDFC Bank? Devin Choksi, good afternoon. What do you think?
Hi, Nikunj. Good afternoon. Well, at the outset, I think put together both these companies will achieve a market capitalization at current market price of around 14 lakh crores. So obviously, I think one thing is certain that the weightage of merged company will definitely remain higher in the entire index basket as we see it, even if I think one wants to look at it as a single entity. The second point which I believe that I think since this is an exceptional situation wherein they merge, probably a number of schemes which are getting affected because of this, I think, is higher. In my understanding, I think the regulator will take a considerate view because if they don't, then the fallout effect of it is that ingenuinely the stock prices would unnecessarily come down or fall, and which would probably hurt the overall investors' interest into the market. So that I think not technical issues do not affect, I think, the overall interest of the market. I would think that the regulator would probably try and take an exceptional route here and probably set the benchmark. But in an exceptional situation like this, I think they are allowed to reduce the stake over a period of time, if not immediately.
But Devin, wouldn't you expect the clarity to come sooner rather than later? Because what we understand from sources is also that the record date could be in July itself. And again, the articles are suggesting that at least 60 equity mutual funds will have the combined exposure, which will overshoot the 10% cap. And that could be a humongous number if you add it together. Shouldn't one expect the clarity to have come sooner itself?
Ideally, yes. I think, and as a regulator, I think they are quite mindful about the situation in the market. I'm sure, I think, with this story, probably regulators have started working on it, I think, for the technical issues that is arising out of it. So I agree with you, concur with you, that I think it should be sooner and not later.
What needs to change for HDFC Bank to regain its mojo?
Yeah, that's a good question, Nikunj. I guess I think the fundamentals of the bank have probably remained extremely strong and convincing. In my understanding, I think with the merge book, probably they have got the higher amount of balance against the corporate loan book, the retail loan book, even housing finance loan book, and the prime sector loan book. I guess I think that they have already got a significant amount of balance, I think, as far as the portfolio is concerned. According to me, what is lacking in HDFC Bank, and which is generally the view that we all analysts also carry, probably the bank has to come out with a very smart acquisition strategy of customers, or for that matter, even for corporate loans. I think they should have a relatively faster process to close the offer which has come or the process which has come. I guess I think their digital framework, probably at the front end, is required a complete revamp, which I believe they are doing it. Should that happen in a good time, then I believe they hold a good chance, because I think currently 23-24 lakh crore AUM of the merged company, and eventually going up to at the rate of 20% growth, is going up to around 50 lakh crore in 4.5 years or 5 years time. And in such situation, I would like to believe that I think the bank will be successful only when their digital framework is stronger, their ability to acquire customers is stronger, their ability to close the transaction is stronger, and in turn, I think, manage the cost structure also well within the organization. That is lacking. If that happens, then that could be a bonus, I believe.
Right, Devin, we leave it at that. Thanks so much for joining in with that perspective. We've talked about HDFC Bank and the kind of overhang that you're seeing on the stock. Let's talk about some of the other buzzers in trade. And today, of course, it's Tata Consumer, which is right there on top. Idea after that fundraise buzz, that stock is holding higher, seeing another sizable gain today as well. And this after a very strong last week. Telecom, we've highlighted as well, has been a very strong show, another 3% higher there too. And then the Realty pack continues to hold up. So after that big breakout on DLF, it's now Oberoi Realty, which is sizably moving up today. It's a good 3.6% move that you're seeing on Oberoi Realty. And by the way, the chunk of the move has only come in the last half an hour, or rather last 1 hour or so. Kunal, still like DLF, or would you diversify into names like Oberoi Realty, etc. too?
I think still like DLF. We'll stick to that. Oberoi Realty also looks attractive, but my only concern on the short-term charts is that most of the indicators, so I was actually looking at the charts for the non-F&O names, Prestige, etc. The indicators have come into a deep overbought territory, which means that there is a very high degree of likelihood that in the next 1 or 2 trading sessions, we may expect some decent cool-off into most of the real estate names. So I think in that regards, I would still not venture into buying or adding these stocks at current levels. But over the next couple of days, if there is any kind of a 3 to 5% dip or a correction to these names, specifically the likes of Oberoi Realty or maybe DLF, then I think that could be a good enough zone to add further.
Okay, not just Oberoi Realty, but the entire pack we've been highlighting of late has been holding out very, very smartly as well. That, of course, is one space which is looking buoyant. Telecom being the other one, that as well has been holding out very strong. Vodafone, like I just highlighted, Tata Com has been doing well, and Bharti as well has been holding quite smartly too. Nitin, just wanted your thoughts in on both realty as well as telecom and whether they're still investable opportunities.
No, so I think reality has been, has done really well. Most realty companies have actually, so it's benefited from a couple of things, right? So it's been the consolidation in the sector with the organized reality actually gaining market share at the cost of unorganized reality. The branding that has taken place, which has enabled most of these companies to become marketing machines and the way they've sort of gone out and, sold. And the third is the fact that the balance sheets of these companies have never been better. All of this led with, but I think you're also going to have a couple of challenges as far as the reality companies are concerned. One is the fact of the impact of interest rates being where they are, and if there's any further hike, which doesn't look likely, but if there were to be a further hike, that could be one headwind that they could sort of hit. And the other is that for a very long time over the last 5 years, prices were very stable. Now, in the last 6 months to 1 year, we've actually seen prices going up, which is going to affect the affordability index. Having said that, I think the visibility on business is good in the short term for them. The pre-sale numbers have been very robust. So I think they will continue to do well. There might be short-term corrections, but I think real estate companies are in for the long haul out here. As far as telecom is concerned, I think it has become a two-player game, and there's a marginal third player which is in play. I think a lot of the spending on 5G infrastructures has been front-loaded. As it takes off over this period of time, we should see strong cash flows emanate for the telecom businesses. And you're seeing companies in that sector actually reflect that in terms of the performance. So I think telecom is going to be a steady cash flow generating sector over the next few years.
Okay, so cash generating sector, that's what it looks like. But the other cash generating sector has been automobiles, right? And it's been raking in good money for investors as well, given autos has been one of the best performing sectors. And going forward as well, the launch pipeline is quite strong. In fact, for Maruti Suzuki itself, it's getting ready to launch its most expensive car yet. Its upcoming Invicto is slated to be launched on July 5th and will cost more than 20 lakh rupees. What does Maruti's entry mean in this category, and what could it mean for the entire sector? Shrishti is joining us to talk to us about that.
Well, yes, 5th July is the date that we're going to be looking at, wherein Maruti Suzuki is coming up with its most expensive car launch, and that is Invicto. That will be based on Innova High Cross, and the company will come up with a price of over 20 lakhs car, and that will be a segment wherein Maruti Suzuki will enter, because they are promoting it as it is going to be a luxury model by Maruti Suzuki, which is going to be quite new for the company. But the big question is then, can this be a threat to the companies which already have a dominance in this particular segment? That is the MPV segment, wherein XUV 700 from Mahindra as well as Tata Motors Safari has a good hold. So let's try and find out that. But apart from this particular launch, a couple of more details, wherein Invicto would be based on Toyota High Cross platform and will be manufactured in Toyota's Bidati plant in Karnataka. Other than that, let's talk about the whole MPV space. So Maruti Suzuki is a leader in this particular space. They already have the van and the Ertiga in this space. But coming to the luxury model, this will be the first ever launch by the company. But the key to note by the consumers will be the brand perception, because Maruti Suzuki till date is known for its mileage and more affordable cars or so, but luxury is something that consumers don't expect from Maruti Suzuki, but they are now seen to be breaking those barriers, and with this particular launch they will cover all the portfolio gaps. So that is something new by Maruti Suzuki. Other than that, though it is will be based on Innova Hycross, so on your screens you will see the sales data for Innova Hycross, and analysts believe that more cannibalization can take place from Innova's portfolio rather than this being a threat to XUV700 as well as Tata Safari. So 3,000 is what the company sold for Hycross as well as for Krista. The sales for monthly data is 1,500, and for Tata Motors Safari as well as M&M XUV700. Over the months, we're going to be looking at what kind of a sales number or the booking numbers keep coming in for Invicto. That will be the key to watch out for. But for now, analysts are believing that it might have more of a cannibalization effect rather than a threat to both of these companies. Back to you.
Okay, that's the take coming in from Maruti's latest offering along with Toyota and getting into that 20 lakh plus category. But my colleague Sumit Chaturvedi also spoke with Shashank Srivastav about what he's making of Maruti's newest offering.
So we will have to wait for some time to see the booking trends and what are the trends post the price announcement before we come to a conclusion about what the stable demand would be. But really this segment overall, if you look at the 3-row SUV MPV segment, was about 258,000 last year, out of which in the premium side, which is greater than 20 lakh category, was about 110,000. So the volumes are, there are 8 players in this segment, including the Carens, the Alcazar, the Hector Plus, the Scorpio and the XUV700 and so on. So the volumes may not be very large, but it's also good participating in a segment which is rapidly growing. The greater than 10 lakh category has grown to be 5% of the industry. It was just 1% a couple of years back.
And so, looking at overall market, this is going to be only automatic variant as we understand.
So the variant strategy and what all the variants will be available at what prices we'll be announcing on the 5th of July at the time of launch of the Invicto.
Okay, for the markets, we're holding up around that 18,750 mark. Bank Nifty has recovered from the lowest point of the trading session, but the outperformance continues from the broader markets. On that note, Nitin, we let you go. Thank you so much for joining us, and we'll slip into a very short break and see you in a couple of minutes.
The closing trades right here in 18 hours. Attempting a bit of a rebound. Let's see whether it's sustainable or not. At least we've made it back to that 18,800 mark for the Nifty futures, but haven't had a meaningful push so far at least. It's really metals all the way, and yes, Tata Consumer holding out well, ONGC, Tata Motors, but unfortunately you need others as well to pitch in, which hasn't happened quite yet. But let's get in some closing ideas then. Manoj, what's on your list?
But at least metals as a sector, if you look into statistically, the entire derivative market has got a weightage of around an average of around 7.5%, and right now the metal sector is around 4.8 to 5%. So we believe that there is a mean diversion of at least 2% open interest in the entire market-wide positioning. So Hindustan Copper tops the list. I believe this is one stock along with Tata Steel, though we would still go with the Hindustan Copper because of the cash buying that we have seen. And we believe the stock has a target of somewhere close to 124 to 126. So we advocate buying it closer to 115. The stop loss here should be 112. And the second thing is, like I was mentioning, pharma as a sector, though the open interest value in the entire derivative market here is just 3%, and usually it goes to around 5%. So we are expecting a cash buying. This would be a cash trade that we would recommend for Zydus would be at 518 to 520. The stop loss should be 510, and the stock has a potential to go 540 as a target.
Okay. Just scanning through the market setup, and we are 150 points away from the Nifty all-time high, and that's really been the last 15-day story in terms of where the markets are. Kunal, I go back to this very basic question. The more you consolidate, the weaker the market gets, or the stronger the market gets when the breakout will happen?
No, the stronger the market gets, because the context over here, Nikunj, is that the setup for our markets, whether it's the indices we look at, the market internals, the global setup, everything is favorable. So to expect a shock over here or a negative surprise could be a bit of a stretch. So we look at the stock specific reactions, like what has happened to stocks when they've broken past above their previous highs, whether these stocks have gone through an immediate correction or these stocks have gone through a consolidation. Most of the stocks, whether it's the high beta names like DLF, the moderate beta to low beta stocks from the PSU basket, etc. Most of these stocks, they've gone through their multi-year breakouts, and they've gone through their breakouts in a very subtle and a gradual kind of a fashion. So that generally augurs very well that the index would also replicate a very similar kind of a phenomena. So I would not just expect a breakout on the index, but I think it's going to be more sustainable this time around because of the all-round performance we've seen for the index, both in terms of sectors as well as individual stocks.
Right. Kunal, let's have your closing ideas as well.
So that will be United Spirits. I've been bullish on the stock and would recommend a buy on United Spirits. I think that's a stock which looks extremely attractive, now trading at 900 odd levels. Would look out for a target closer to 980 mark.
Okay, so that's about United Spirits. But Mahantesh Sabrad is also joining us on the show. Mahantesh, wanted your take regarding the HDFC twins because they're really not participating at all.
I think that has been the case for the last 2 years, 3 years or something like that. HDFC has been a rank underperformer among the financial sector peers, even if you take the banks. I think what primarily is affecting is the long delay we have seen in terms of the merger of the HDFC twins. And that's perhaps is weighing upon the overall sentiment of the stock. While the business outlook does remain as good as any other financial institution, as good as any other bank, the valuation worries are something that is weighing the stock down. HDFC, if you remember, as a bank, always traded at a premium valuation. One of the best, highest valuation multiples was what it always received. Somewhere the merger will try to actually rationalize that valuation. I think that is what is really happening. But yes, the underperformance has not been of recent origin. It has been there for like 2-3 years or something like that.
So let's understand this valuation criteria, because our understanding is that, look, in the near term, yes, there would be a bit of a NIM compression that will happen because HDFC cost of deposits and HDFC Limited costs of deposits are different. But ultimately, the franchise is growing at 20% plus. CASA is fantastic and the branch network will add up to their entire kitty. So why are markets so nervous?
I think the first point that you made in terms of NIM compression, is something that is actually weighing upon the outlook ahead. And HDFC, in terms of its growth, unlike in the past, is not outperforming its peers by any wide margin. In fact, some of the other banks have really caught up with it and bridged the gap that the bank would have. The growth outlook, like I said, the growth outlook doesn't have a big challenge, but the other peers are catching up. Therefore, the valuation premium or multiple that they used to get is getting compressed. NIM compression is the first thing and foremost thing that will really affect the sentiment. Growth outlook, which in terms of the credit growth outlook, overall credit growth in the economy is somewhere around 16%. HDFC probably is just about beating that, or there were periods where it was actually underperforming. But having said that, the stock is not, or the company is not doing anything great or different from other peers for it to receive a valuation premium.
That's about the HDFC stock. Let's take a look at some of the other names as well. So JSW stocks have been in focus. JSW Holdings, of course, has been high by around 12%. Now you also have JSW Energy, which is perking up, and that's the exclusive story that we have been bringing you, that Mr. Sajjan Jindal might be looking at picking up stake in MG as well. In fact, if we can, let's go across to my colleague Ajay, because he's been picking up those exclusive stories. What would it mean for the entire JSW group, and could it really disrupt the EV space? Ajay, tell us what's the latest you're picking up?
Well, that's correct. We told our viewers on April 24th that Sajjan Jindal and his group are circling a big chunky stake in MG Motor India. Today, of course, JSW Holdings is gaining 7% in trade, along with JSW Steel and even to a certain extent JSW Energy. But let me tell you that our sources said that the listed entities may not have anything to do directly with this transaction. What we understand is that it's the family office of JSW, of Sajjan Jindal, which will be picking up anywhere between 45 to 48% stake in MG Motor India, and they are not only looking at MG Motor India, they are even looking at some of the other EV companies like BYD, etc. as per our news. But right now the focus is on MG Motor India because of its EV capabilities. It is still expanding its capacities, and MG Motor India does require funds. The entire company is valued close to around 24,000 crore. So 48% will be picked up by Mr. Jindal and his family office, and rest around 4 to 10% would be with employees and dealers of MG Motor India, our sources say. So this way the transaction would be structured. Remaining stake will be held by the main company, MG Motor parent China. So what happens this way is the Indian companies, the Indian owners, including the dealers, employees and the larger one, in this case Sajjan Jindal and his family office, will hold over 51%. So the necessary condition that 51% should be with Indian ownership, that gets satisfied, and we understand that it is actually moving forward. In the next few weeks itself, a transaction could be announced officially. Indirectly, what it does for the group, which has got very big ambition in renewable energy, green energy, and JSW Energy could be the vehicle. Indirectly, the benefit would be going there, but directly there is no like-to-like comparison. It is important because JSW Group is one of the largest groups among the top 5. Their direct entry into EV, apart from the traditional auto companies or even startups, so this is likely to shake up the ecosystem and invigorate the entire ecosystem definitely. But this is a very interesting story which is developing, and we understand it's moving forward very speedily.
Mantesh, what is the best way to really bet on this entire EV transition? Should one buy Tata Motors? Should one buy a battery company? Should one buy both? What is the best way? I mean, everyone's convinced that EV is real. Everyone is convinced that EVs will grow. What is the best way to bet on it?
That's a good question you have asked, because in the entire value chain for EVs, it's not just the automobile manufacturer who tends to benefit in terms of the overall growth spurt that you will get. But I reckon that value chain for essentially battery makers will be far more better, both in terms of percentage as well as overall volumes, relative to an automobile company. Because finally, for an automobile manufacturer on the EV side, there are other associated value inputs that or the inputs are actually cost. The value inputs will be considerably high. Branding is one of them. So I wouldn't like to play any of the automobile companies simply because there is an EV focus that is coming on into the company. Mind you, most of these automobile companies in the initial phase will have a high cost structure for manufacturing an EV with low volumes. That means essentially their capacity absorption capability will be very, very poor and will reflect very poorly on the margin. This has been the traditional case with automobile companies whenever they introduce new products. Only when the break-even volumes kind of reach will they be turning profitable, will they be able to deliver better on the margins and capture the larger share of the value chain. But battery manufacturing is the way to go to, and there are very limited such companies actually in India capable of having a full spectrum battery manufacturing capability here. So in the listed space, in India, it is very poor. And EV is not the strategy that an investor should have for an automobile company. The outlook for other traditional IC engine companies could turn out better.
Vinay Rajani also joins us. Vinay, what is your sense on when markets will make a new high?
Yes, definitely. If you were to look at it, today's close is the highest close in the upward run, and previous high is not taken out on an intraday basis. But if you were to look at the close, it is the highest close, and small cap is continuously showing strength. Bank Nifty is a concern which is moving in the 1,000-point range for last 4 weeks, but it's just a matter of time. I believe that overall breadth of the market is very strong. Sector rotation is suggesting that Nifty should make a new all-time high, and overall target that we have in our mind is 19,000, which comes out from the upward sloping trend line on the monthly charts. So we believe that Nifty is headed towards the 19,000 target, and overall we may remain good in the coming times also. So overall, 18,400 to 500 is a strong base for Nifty, and 19,000 is the immediate target that we are looking for. So overall, yes, we are bullish, and stock specific also, there are a lot of opportunities, lot of fresh breakouts which can be seen on the mid cap as well in the large caps category also. So yes, we are bullish with the target of 19,000.
Talk to us about a couple of these counters as well. KPIT Tech, last 2 days has been under pressure, and Tata Consumers, that's just trading in another orbit. Vinay, the question is for you.
Yeah, sure. So Tata Consumer, Tata Coffee, both the stocks are rising with the momentum significantly. FMCG sector is performing well, and Tata Consumer is on the verge of breaking its all-time high. So previous all-time high adjusted chart is showing that 870 was the previous all-time high, and now it is on the verge of breaking out from that level. So clearly, it is a bullish triangle breakout on the charts, and it's not only a daily chart, it's a monthly chart. So long-term breakout is there. The sector is doing good, so it is looking exceptionally good on the charts. So it can outperform the sector as well as the overall market. So as of now, momentum is there, and this kind of stocks can give good return in the short term also. Looking out the KPIT Tech is into a profit booking phase. For last 2 sessions, it has been falling with the rising volume. So it is into a profit booking phase. The next support I see in the KPIT is around 975. So around that level, there is a strong support from where it could bounce back. So primary trend is up, but short-term correction is there, which could take this stock towards the 975 odd levels on the downside.
I'm looking at some real estate stocks here, and now I'm just looking at Prestige, DLF, Max. I want to look at Bombay Dyeing also. Right outside office, I understand that there is a new development which is starting in terms of where the real estate development will happen. There you go, Bombay Dyeing. Watch out for this one. A lot of HNI investors have just checked into Bombay Dyeing in terms of what the real estate development there seems to be emerging. What is reversing today? Zomato. What has reversed already? Canes. What has reversed? I wouldn't say it's reversed, but it is underperforming, I think, is HDFC MC. But one stock which in a sense has been a poster boy of this entire summer rally of 2023 is Bajaj Finance, and today that one is taking it easy. Kunal? Bajaj Finance down 1%. Just 1%, it's okay, but down.
Yeah, down, but again, even this stock has been very sideways, Nikunj. Over the last, I think, 8 days, the stock has been trading at a band of 7,050 to 7,200. So 2% band approximately for Bajaj Finance in the last 8 odd trading sessions. Again, indicates that the large cap arena is a bit mixed in terms of a lot of stocks consolidating. So I would still believe that maybe Bajaj Finance can come back towards 7,050 mark. That could be an opportunity to go for a contra buy. But again, not expecting any kind of a major up move or a breakout pretty soon for these stocks. So just about a consolidation which may continue for some more time.
Mantesh, I can understand why HDFC Bank is not moving higher. But is there a specific reason why Reliance is not moving higher? Because what we understand that these flows are ETF flows, which essentially follow a benchmark and a weightage. And in every benchmark, if you are investing via the ETF route, Reliance will have a presence. It could be 8, it could be 10, it could be 12, but Reliance will have a benchmark. Reliance will have a weightage. Yet Reliance, at a time when flows are back, is underperforming. Why is that, Mantesh?
So, if you look at what really triggered the Reliance growth, you have to go back to the rights period. Now, rights period was the time when Reliance outlined a vision that they will become zero debt soon, and pretty soon they did achieve zero debt. There was a combination of the rights issue money flowing in. There was a combination of new money flowing into some of their subsidiary ventures, primarily Geo platforms. And that made the company for a brief period of time debt-free on a net debt basis. But then gradually what has happened is, again, debt has creeped up. In the last year or so, debt has again crept up to the earlier peak levels that used to be over 3 lakh odd crores in rupee terms, has now crossed 1 lakh crore in terms of rupee terms. So that phase of net debt being zero had propelled the stock higher, and thereafter the underperformance that we are seeing on Reliance has got to do with the same issue, because the debt has crept up. Having said that, Reliance has been posting nearly steady results. It's not posting any disappointing kind of results in whichever segment that you take, whether it is oil to oil and gas and chemicals to even retail ventures. They are doing well. So what do you outline in terms of major funds, major ETFs having that necessary weightage on Reliance, who should take or propel the stock as much as the Nifty does over a period of time is perhaps not happening because there are other funds who are trying to become a little underweight, shedding of the excess weight that they gathered because the stock had rallied earlier. I think that's the only phenomenon. There is nothing to really to fault in the company's performance right now or in its growth outlook ahead. It seems quite steady. And again, once again, the focus will be on the debt.
Nothing to nitpick when it comes to Reliance Industries. And finally, it seems to be breaking out a bit today. It has hit a 5-month high on an intraday basis, Reliance Industries, that is. Let's see where it heads. Just wanted to flag out the cues that you need to have on your radar for tomorrow. Of course, the biggest one is the FOMC rate decision, which will be out later tonight. The street is working with a pause at this point of time, but the changes to the dot plot as well as the commentary coming in from Fed Chair Jerome Powell would be important to track. We'll also get the crude and oil inventories and the PPI data coming in from the US. Other than that, the other important bit really to look from the corporate action point is Wipro, because tomorrow is the last date to buy, to be eligible for the buyback if you want to tender your shares for the buyback. So that becomes important. And then there are a few names, the likes of Saturn Credit Care, which are going to consider fundraise, etc. And there would be a stock split on Varun Beverages. So we might see a technical adjustment there. But largely, these are the cues. But Vinay, just given the fact we are, ahead of a big event, and as you pointed out, we are likely to close at record high levels, what would be the best strategy? Take the profits off, you continue with your long positions?
I would suggest that we should continue with the long positions. There are stocks which are outperforming and we can opt for those stocks. I'm not asking people to hold all the stocks or all the entire set of stocks, but there are few stocks which are looking extremely good. FMCG stocks are there, some infrastructure stocks are there, and oil and gas sector is today performing well. So selectively, I am bullish for tomorrow. So even though something comes out negative, there are some stocks which can even after gap down can reverse on the upside. So there are some opportunities on the upside. So Nifty for sure I am bullish, and I would suggest that one should continue to hold on to the long positions.
Two stocks which have seen a sharp spike, and I think Relaxo is one such case in point. There's also Godfrey Phillips, if we can just bring up that intraday graph. Relaxo has seen a big spike in the last few minutes, 4.25% higher, and Godfrey Phillips as well has had a good last 1 hour, 3.25% higher for Godfrey Phillips as well as we speak. Kunal, anything unusual on the charts? Relaxo especially, but I don't know if you're tracking the charts or not.
Yeah, I do track Relaxo. And I think it's a good setup over the last 1 or 2 months. I remember, I think, tracking the stock when it had shot up to 800 in a matter of, I think, 3-4 trading sessions from 750 mark. The volumes at that time were almost at a multi-month, multi-week high for Relaxo. The stock had just broken past above its 200 DMA in that leg of an uptrend. And I think post that level, we've seen the stock making a consistent pattern of higher highs and higher lows. Today, the charts could be a lot more interesting as well as better because the stock has confirmed a breakout of its 200-day moving average. So something which started off 2-3 months back for Relaxo from those 800 levels, now moving on to 900 is a very good sign of a trend in the making. So I would expect the stock to continue to move up higher. And with this surge in volumes or this consistency in volumes, we can expect at least another 10% move from current level. So 980, 990 could be a next target for Relaxo.
Okay, so that's about Relaxo, but let's talk about the stock ideas for tomorrow. Vinay, what's the BTSC idea?
Yeah, so one can go for Dabur India. FMCG sector is looking good, and Dabur India has given a fresh breakout after some consolidation. So it looks good for the BTST with a stop loss of 550. And second stock I would recommend is the L&T Larsen and Toubro. It has not moved significantly today, but overall trend is very strong, and last week's close was very convincing. So considering the overall trend, I am suggesting long in L&T with a stop loss of 2290. And third stock which one can look at for BTST is the ONGC. So ONGC has witnessed some correction and again resumed its primary uptrend. So keeping a stop loss at 155, one can even go long in ONGC.
BTSC trades?
Well, bet on large cap names, and I think Reliance Industries looks attractive at a current juncture. So would suggest a buy on Reliance, targets of 2,600, stop loss at 25.20. And TCS is the stock which I would believe for a contra opportunity. The stock in the last 2 or 3 days has formed two interesting bullish candlestick patterns. So this could probably be an indication that a near-term bottom could be at place for TCS. So would go for a contra buy, targets of 3,350, stop loss at 3,200.
Okay, so that's about the best bets coming in. Kunal going with large caps, TCS as well as Reliance. But talking about the other stocks that were buzzing in the trading session today, because we're just towards the last couple of minutes of the trading session, you had FACT of Fact, which is higher by 15%. Philips Carbon has made a good move, 8% higher. Aster DM Health is the other one, Galaxy Surfactants, Rain Industries, Shyam Metallics. So the list of gainers is fairly large. On the losing side, Zomato is the one that is really, catching attention. 6% cut coming in there. Mahantesh, do you have a view on Zomato?
That was a very difficult stock to track, actually. The price, not only are the pricings very wild, even its financial performance swings are very wild. And there seems to be, at least in the near term, not much visibility about its return to profitability, although there are certain people who are very hopeful they would. Let me clarify by saying that over a long period of time, when I say long period, that means over a 5-year period or plus, Zomato is a strong player, is a player that is here to stay and will eventually deliver profits which are going to be quite sustainable. So from an investor's point of view, whether today is the right time to enter the stock or not is a difficult question given the current wild swings that they have, both on the stock price as well as on the financial performance side. I would rather put in my analyst head on the stock 2 years down the line and see whether there is much stability there. Probably the returns thereafter could be meaningful.
Let's begin winding up for the day. Mahantesh, good to have you on the show. Thanks as always for joining in. Vinay, Kunal, we'll let you guys go as well. Closing in at the session highs, 18,749, but pretty flat indeed. So it's largely been a day of consolidation, although we did make an attempt to try and recover. But yeah, metals really were the ones which sort of saved the day. JSW Steel, Tata Steel, they all held out smartly. Reliance too shot up about 1.25%. It's actually one of the top gainers today. So we've been cribbing about the underperformance of Reliance, but in this quiet day, even a 1% move from Reliance ensured at least a close above that 18,700 print. Tata Consumer has been a star performer today. ONGC, Tata Motors, Apollo Hospitals, Nestle were some of the other names which also held out. And from within the broader end of the market, there was Rain, Oberoi Realty, Petronet, which also were some of the big buzzers in trade. Banks did not have a great session today. So IndusInd Bank, Axis, HDFC Bank, financials like Bajaj Finance, Bandhan Bank, Can Bank, RBL, they were all ranked underperformers. In fact, Bandhan Bank lost about 3.5%, Can Bank over 3% down, RBL down nearly 3% as well. And then, of course, there was an Ipca Labs as well, along with Balrampur Chini, which also were laggards. But that's pretty much it. Been a very, very quiet day. Let's hope that we see that much awaited breakout in tomorrow's session. For now, it's a goodbye from all of us.